Hi, and welcome to the weekly Roundup with Immutable Holdings, where we cover the key developments and happenings across Web3 and the digital asset ecosystem, along with sharing some of the latest developments within Immutable Holdings. My name is Billy Baxter. I'm the head of corporate development and operations.
And I'm Jordan Freed, chairman and CEO of Immutable Holdings.
Hey, Jordan, this has been a pretty busy week. A lot of that all kind of stems from what we covered last week about the fallout of FTX. I'm not sure about you, but I'm just using Twitter as my kind of primary means of entertainment. So I guess for the benefit of the folks that are listening here, you want to just kind of cover some of the latest developments that kind of came up surrounding FTX, or as I like to call, the FTX Saga Continues.
Absolutely. I think for anyone in the crypto industry, it's important for us to continue to talk about FTX, to talk about what it means for our industry, and to understand what went wrong and what happened so that we can move forward as a crypto industry and learn from the mistakes that were made, and of which there are many. There's mistakes on behalf of the regulators, but there's also mistakes on behalf of this platform run by Sam Bankman-Fried, and we're learning a lot about that. First, if you're listening, I'm getting this question often. I'm not actually related to Sam, even though we share the same last name. So we're not related at all. I have had the opportunity to meet Sam on a couple occasions in the past, as well as be on phone calls with several at FTX. I will just echo a press release we put out. Immutable Holdings, for us, it's business as usual. We are not affected by FTX. We do not have exposure to FTX, FTT token, or Alameda Research. Our internal controls are strong. Our internal cash controls are strong. We, as a business practice, just do not take exposure to volatile crypto assets. We have a very strong balance sheet to get us through the next 2 years and more, perhaps even into 3 years. But we're very excited about where we are as a company and what our opportunity is in this correction. With that said, the situation's unfortunate. You have millions of people, many of whom came to crypto for the first time through a Super Bowl advertisement we saw with Larry David promoting FTX, or through Tom Brady, or through Kevin O'Leary, or through some business promoter. And what they came to use was not the blockchain itself and not cryptocurrency itself. What they came to use was a centralized platform. And what we've come to learn is this centralized platform, FTX, wasn't really a true crypto business at all. It was a scheme to get lots of user deposits, which on the back end were never really held by FTX. We're actually used to market make, and we're used to liquidity provide, and to do these very risky business activities in a totally unrelated company. So it's shocking. It's shocking from Sam, who became somewhat prolific in our space for massive political contributions, but it is an isolated incident. Sam is a bad actor. There are bad people in any ecosystem. And unfortunately, I think the rise of new technologies typically attract scammers and fraudsters who see opportunities to make a quick buck. It was the case in the dot-com era, where fly-by-night business executives would issue stock trying to, sell you on the latest new hot technology with no intent on building a real business or no business chops whatsoever. Sam should not have been at the helm of a global order book the size of FTX. Sam did not have the proper controls in place to be able to protect user deposits and funds. They were not properly regulated, and they were not compliant. And this is, again, unfortunate. That is not the case for every company in crypto. There are so many good companies in crypto that are working with regulators proactively, are doing things the right way, do keep proper reserves. And they're largely good actors with good intentions. So this is unfortunate. Of course, this is having a cascading effect in the industry. Other businesses are affected. It is not just FTX and the one bad actor. Others that trusted him, that had deposits with him, are affected. But we are not. Some of our peers are, but again, I'll echo, we are not. We are strong. We have a strong balance sheet. And while our stock price may be volatile and is, not too far off from just really being equal to the cash and assets we have on hand. We do think that the market is overreacting and is, as is the case, we saw in the .com era, eBay was valued at half of their cash on their balance sheet. We know our stock will be volatile, and we encourage investors to be prudent, but what we are building is real. We're building a real business with real strong fundamentals, and these are real brands like NFT.com, and we'll talk a little bit about coffee and crypto, our latest venture, but we're pleased to have survived this. I think, again, credit to you, Billy and Melissa and our team for having those financial controls in place. Melissa's our CFO. The crypto will recover and will come back stronger than ever before. I know that to be true.
Yeah. And like you kind of touched upon it before, but I think one of the things that was kind of shocking, just more shocking that they weren't there for an institution as large as FTX, was just like the lack of internal controls. Like if anyone had the opportunity to review some of the Chapter 11 bankruptcy filings that the new interim CEO put out there, it was just really shocking to just see some of the practices that were in place at FTX, especially around custody, not only just of customer funds, but just over crypto in general, where, basically people were able to have, there was no segregation of duties. And then also there was no kind of audit trails of transactions taking place. And I think anyone that's in the industry and the good players that are out there, but I wouldn't even call it good players, I would just call it like just a standard practice in the industry. There's pretty prescribed procedures that are out there, whether it's from the AICPA or other kind of like standard setting bodies out there that tell you what you need to do when it comes to, custody of your own funds. And then also in particular around customer funds, like especially when you're involving crypto, we have to handle, private keys, et cetera. And to just see that stuff happening at FTX, an institution that large, billions of dollars, it's just so puzzling. And that's why, you kind of pointed out, I think that this is truly like an isolated incident and not necessarily pervasive across the industry. Or, we'll find out if it is happening at other places. But I think for the most part, what was happening at FTX is not indicative of how other companies are proceeding and how operating.
Yeah, one more unrelated to FTX, just one more comment on this. And it's more just, again, the macro trend on exciting technology, capitalist opportunity, and capitalist opportunists looking to make money on that opportunity. The true ethos of what a blockchain as a technology can do is fundamentally amazing, right? Bitcoin really is to blockchain what email was to the internet, and the opportunities to do things like decentralized finance or NFTs and a whole world of decentralized applications like gaming and play to earn gaming. All of this is enabled through this technology, through these blockchain technologies. And now we have many blockchain technologies. I consider myself in the category of opportunistic entrepreneurs that see all of this amazing value capture in building these businesses like NFT.com, delivering on the promise, building awareness, access, and adoption, as we like to say. It's our core mission at Immutable Holdings of not just the tech, but things you can do on blockchains like NFTs. But unfortunately, as I said, so many of those, and I don't think FTX will be the last bad actor and Sam will be the last bad actor exchange out there. There likely are others. FTX wasn't the first and they won't be the last. We saw this with Mt. Gox. We saw this with Celsius. We saw this with Voyager. And I wouldn't even say necessarily that those were bad actors, other than they were way too cavalier and way too lax on internal controls and money management and how they were using user deposits. I think it's prudent to say, if you don't know where the yield is coming from, you are the yield. And if it's not your keys, it's not your crypto. And if anything, as an industry, one of our biggest lessons in moving forward is a move to non-custodial, is a move to the platforms you're using shouldn't actually have access to your assets. And that was always one of the main value propositions of a digital asset like an NFT or a Bitcoin, is that this is something that you can hold. You technically don't need a bank to deposit this into. You can hold it. You can manage your own keys securely and do that. And that's exciting. So the competence of people will grow. We'll be able to get people to understand blockchains. It is still so early. and the growth in this sector is going to be so explosive. I think the opportunity that we're seeing here, I would equate to, the 2008, 2009 financial collapse. We were over collateralized there. What was wound down, but lots of wealth was built, post that. And if you look at also 2000, right, the dot-com correction, those are two, we can learn a lot from those previous cycles. We can learn a lot about what will happen after this. I will just point out, and I'll encourage everyone listening to this, take out your phone and look at the most used applications on your phone, whether that's Airbnb or Facebook or Twitter. Most of them were birthed post 2008, post the financial crisis. Most of the modern internet applications that we're all using, we really, came to be in that 2007 to 2011 period. And a lot of opportunistic people, who started asset management businesses or came out heavy trying to build the next great tech companies. Again, this was in a post-2008, post-2009 world, and we've seen massive growth there. Whatever this is, what's happening here with rising interest rates at the macro level, inflation, we're fighting inflation. We could argue how we got to this period of inflation through a global pandemic and excessive money printing, et cetera, but we have this need to solve, these money supply issues. We have rising rates. On the other side of this, I'm very confident that the case for crypto and the case for Bitcoin continues to thrive, and that the businesses that are prudent enough, that have multi-year runways like Immutable Holdings and NFT.com, those will be the winners of this next cycle.
I think it goes without saying too, that what essentially happened with FTX was one player in the space that essentially blew up. But at the end of the day, the base protocols, i.e. Bitcoin, Ethereum, those didn't have any troubles, right? So the underlying tech is there. It's just a matter of who's operating on top of that. That's raising some questions. And also too, I know you touched upon this before, but there's this ongoing discussion around centralized finance in crypto, i.e. institutions like FTX, BlockFi, Celsius, Voyager, versus DeFi. And it was also really interesting to see over the past week, just the increase in activities that were taking place on some of the popular DeFi platforms, one particular being Uniswap, which recorded more transaction volumes than some of the largest centralized exchanges, for example, like Coinbase. So I think, Jordan, you touched on this before, but I think this whole concept around self-custody and being able to be in control over your crypto at all times, actually having the rights to the private keys, is probably something that's going to persist ahead as we kind of come out of some of these lessons learned around the recent blow up. So
yeah, and maybe one comment on the crypto assets themselves. I mean, we've this market in particular, again, in a world where things are unwinding and being sort of unlevered. We're sort of winding down the amount of leverage that's been in the system. There was a lot with the increase in the money supply. I think what we're noticing is that crypto in particular has experienced the collapse of a top stable coin, UST, earlier this year, and Luna, which wiped, overnight, really over $40 billion, close to $50 billion, just off of just wiped out completely, just investors wiped out. And then again, the second largest cryptocurrency exchange disappearing. It's not a question of if we're going to survive this. It was always a question of, we'll survive this, but how affected will crypto be and for how long? And, at the time of recording this, I can't help but be bullish and excited because Bitcoin has held up remarkably well despite everything that's happened. Bitcoin is relatively flat. Bitcoin has been through, this is peak, we can agree, compared to the 2013 cycle, the 2015 cycle, the 2017 run up in Bitcoin, and then subsequent collapse. And then this most recent bull market, over 60,000 Bitcoin, and most recent retracement down to, around 16,000 where we are today. Bitcoin has really had everything thrown at it, from regulatory fears to, China nationalization, previous cycles, and now the second largest marketplace in the world collapsing. And the fact that it is still here, that network has never gone down, and that there's still the amount of institutional interest in it and in the underlying technology, you can't help but be excited. So that, fear is in the market. There's blood on the streets. And I think that there's such an opportunity to capture value, both as investors, but also as business builders in this cycle in particular. So, if anyone's worried about, what's going to happen with Immutable, with NFT.com, we're doubling down, Billy. Like we are more invigorated or reinvigorated now more than ever. And that the opportunity for us is, I was worried about FTX having a viable crypto NFT marketplace. It's one less competitor. And while I'm not celebrating that, that's pain. And thoughts with everyone affected by this, and everyone who lost money, both the investors and the users, the depositors, and all the creditors there. I wish them the best, and I wish them that recovery. But we are really getting a cleanse. We're getting a crypto cleanse right now, where we're weeding out and washing away all of that bad, all of that, the people who were over leveraged, the people who didn't have sort of those sound financial controls in place. I'm happy FTX happened right now, not after they could have raised another round of financing, maybe at $35 billion or even higher. I think that it happening now saved a lot of people a lot of money. It's good. We needed it in the ecosystem. And now we can focus again on the fundamentals and rebuilding. Fundamentals for Bitcoin are there. I believe in new Bitcoin at all-time highs. I think we'll see them in the next 24 to 36 months. And I do believe that the businesses like Immutable and NFT.com that have been prudent with their balance sheets, have the right controls in place, and are doing things the right way, which isn't overnight, rapid, meteoric rise and then subsequent crash, but building day by day, slow and steady. I think those are the ones that are going to be most rewarded next cycle. I, certainly count Immutable and NFT.com among those winners.
Awesome. Hey, and then I guess, Jordan, before we wrap this up, what other things should we be kind of cautious of as things kind of progress with the FTX fallout? I think over the past week, there was, some kind of troubling news that kind of came out of Genesis Trading. And also there was a program that Genesis was running for Gemini, another large cryptocurrency exchange in the US. So do you think that there's going to be any risk of kind of contagion here? Do you think, we're through the thick of it, or, are we going to potentially see anything more come out in the next couple of weeks or so?
Yeah, it's a fantastic question. So, typically how these companies were set up is they'd collaborate with each other on providing yield, right? There's now word coming out and how Alameda was able to raise their money. It wasn't just using FTX user deposits, but they were offering, there's text threads floating around the internet now where they'd offer 15% yield to people who gave them capital for a market maker. That's quite extreme. And again, I think the prudent thing to do from an investor perspective, if you're deploying capital, it's pretty basic. If you don't know where the yield is coming from, again, you're likely the yield. Someone is going to take advantage of you and your deposit later, especially if it's in a new coin, whether that's inflationary or deflationary. And people in crypto have been most affected by this. This is what we've seen. So does the contagion continue? For sure. We've not seen the last affected company. There's another one was just announced today. There was a Hong Kong listed company that announced that they were affected. We're still really learning. Gemini was sort of late. That was Gemini. We learned about Gemini a week after FTX's bankruptcy declaration. Of course, FTX and it was where Genesis Trading lost $175 million, which they had deposited. And then Gemini Earn, we're learning, was working with Genesis on getting that yield that they were in turn providing. So you can see it was the FTX collapse that affected Genesis, that affected Gemini Earn, and that took a week. So in another week, will we learn for sure? There's going to be a couple other companies. BlockFi, look for them to finally declare their Chapter 11 bankruptcy. Unless someone comes in and acquires them prior, they may be talking to Binance. That may be what's holding off their eventual Chapter 11 declaration. Maybe they can find a last minute buyer who can salvage that liquidity crunch. Of course, that was supposed to be FTX. It's not. So a little bit more to come. Will continue to affect markets and will continue to affect crypto. But the worst, we've seen the worst. We're past the worst. The worst is behind us. You're not going to have another. Right now, it's not going to be another FTX size. These are now the micro ripple effects, which are still large. Don't get me wrong. These are $175 million balance sheet shortfalls, 50 million here, 100 million there. Those matter and those add up, but nothing the size of FTX is going to be at the end way larger than Enron from a bankruptcy perspective. We're already seeing that in the first declarations of the bankruptcy filing. So fascinating to watch. Crypto's not dead. Crypto's not over. And especially for us, cliche to say, but Billy, I feel we're just getting started and we're excited to have the runway that we have, the team that we have, and to be building during this time.
Totally. Well, I think that kind of covers it as far as the kind of the broader ecosystem updates there.
Maybe a shameless plug, Billy, for those who are listening to this. If you're enjoying these updates, we're going to do these Immutable Holdings updates. This is now the third of what will become a weekly series. But Billy, we should share that we are doing a daily spaces on Twitter. I do it every morning now, weekdays, called Coffee and Crypto. You can join us. It typically starts around 8 a.m. Eastern, but we're still playing with the right start time. So look at that. And we also run a free daily newsletter, which now has tens of thousands of subscribers and is growing at thousands of new subscribers per day, 100% free. It's called Coffee and Crypto. It's www.coffeeandcrypto.com. And it's called Coffee and Crypto because you can read it before you finish your morning cup of coffee. And it's not just informative, it's kind of funny too. And that's all credit to Matt Harrison and Yale Fried, who are our writers for that, and who have really done a great job getting that out every day on time. And again, we see that from a business perspective for our investors listening. We do see that as a very strategic asset for us. Coffee and Crypto will easily serve as a very strategic top of funnel for user acquisition for NFT.com and potentially even for us to monetize that itself via a podcast or education or even some premium content that we'll explore. But for now, Coffee and Crypto is free, will stay free. We're just very excited about the number of people in crypto it's helped us build a relationship with. Again, that number is now in the tens of thousands.
So I guess moving on here with some Immutable Holdings updates. And if you don't mind, Jordan, if I can just kind of kick things off here. So I guess for folks that are listening here that may be an investor in the company, this past week, we released our Q3 financials and along with management discussion and analysis, all of which is posted on our issuer profile at www.sater.com, where you can go to look at any of our public disclosures. So I guess in the kind of spirit of transparency, as we were talking about before, Immutable Holdings is a publicly traded company. We have to put out quarterly financial statements and disclosures, and all of that stuff is available through the various corporate filing registries there in Canada where the company is listed. Also, I guess along those lines too, we're working at, in addition to putting out these weekly roundups, we're also working to put out regular communications to our various stakeholders, not necessarily just investors. We just want to keep you guys posted on the happenings that are going on at Immutable Holdings. And this way, just kind of keep a regular kind of communication there. So be on the lookout for, email communications, et cetera. We hope to keep people regularly informed.
These investor updates, it's really important for us to communicate with the market. We're sending these out on LinkedIn, on Twitter, and then we will also put this on a formal mailing list. So at immutableholdings.com, there's a place to put in your email address towards the bottom of the page. You can put your email in there. This will go out to thousands of interested partners, investors, people who are watching the company and our developments, just to keep them apprised and updated on our latest developments, what we're thinking about and what we're doing. And then credit to, of course, Billy, you and your team for helping put these together on a weekly basis, edit them, get them up on YouTube so that we can spread the word.
Well, I think that pretty much covers everything. So Jordan, thanks a lot for your time. And I guess thanks everyone for tuning in. We hope to keep you posted and, come join us on next week's episode.
Thanks, everyone.